Hey, welcome to another episode of DeepTalks.tv. I'm Deepak. I'm a CTO and I work with founders to help grow their companies. In this series, we'll talk about some of the biggest companies today, how much money do they make, and what do they do to grow into the companies they are. So let's talk about Zillow today. If you've been in the market to either buy a house or sell a house or rent an apartment or whatever in the last 10 years, you've definitely come across Zillow. Zillow is a billion-dollar tech company that's the largest real estate listings platform out there. It was founded by Rich Barton and Lloyd Frink in 2006. They founded Expedia. Right after they sold off Expedia, they were like, well, let's buy our first home. And they faced problems around not knowing where to start, listings and all that stuff. So they came up with the idea for Zillow. A lot of people don't know this, but Zillow isn't just Zillow.com. Zillow also owns dozens of other real estate sites. Like back in 2013 or 14, it bought out its largest competitor at the time, Trulia, for $3 billion. It also has Street Easy, Hot Pads, Naked Apartments, and a slew of other properties. So how big is Zillow really? Get this, in 2019, Zillow made over $2.7 billion. That's a lot. Their site gets 8 billion user visits a year. That's a lot of people. Here's the kicker. Anyone can go onto Zillow and create a listing for free. I could go there and I could do it myself today. So where are all those billions of dollars coming from? Let's talk about that. Zillow makes money three ways. Their current revenues, a big percentage of that, about half of their money today, comes from ads, advertising. And these aren't traditional ads per se. This is not when you go into a site, you see pop-ups on all over the border of the site. That's not what this is. Let's say you go to Zillow, you're looking for houses to rent, you're looking for houses to buy, and you're searching, you come across a house that you like. There's a nice contact form right there that says, hey, get in touch. You know what? Yeah, I'm interested. You fill out the contact form. There you go. Zillow knows you are a highly interested potential customer for a slew of real estate agents, mortgage brokers, property managers, all those folks. All these people, like real estate agents, pay Zillow for your contact information. They also pay Zillow to show their information on that page. That's how Zillow makes money. About half of their revenues in 2019 came from agents, property managers, mortgage brokers paying Zillow for your information because you are a potential customer for them. Now let's talk about the second way Zillow makes money, through mortgages. Zillow isn't a lender. It's not giving you mortgage. It can't do that. But because Zillow is a tech company, it can make it easier for you to get a mortgage. The whole process of getting a mortgage in the United States is really complicated and cumbersome. There's a whole lot of paperwork that goes into it. Because you are a potential customer who's willing to get a mortgage, you're a high value lead for mortgage brokers and mortgage lenders. So Zillow can either do your paperwork and sell it to them. If you don't want Zillow to do that, these lenders can pay Zillow to feature their name higher up in the results page when you're searching for mortgage lenders on Zillow. Third way within mortgages Zillow makes money is Zillow also bought out this software company a couple of years ago that mortgage industry uses to kind of process all this information and all that stuff. It's like a SaaS. So Zillow also makes money from software as a service within the mortgage industry. Now let's talk about the third way Zillow makes money. This is by far the most interesting, according to Zillow, right? Zillow thinks this is genius. And Zillow isn't the only one doing this. There are more than a few companies doing this. It's called iBuying. Here's what iBuying is. iBuying just stands for instant buying. Typically, when you want to sell your home, somebody comes to your house, looks at it, does an inspection, all that stuff. It's a long process, and then places an offer, gives you an offer for your home, right, to buy your house. iBuying eliminates all of that process. iBuying says, you put in information and you can get an offer from us within a day. No one's coming to visit your house. No one's getting any inspections done, none of that. How? So over the last 14, 15 years Zillow has been in business, Zillow has amassed this treasure trove of data on property values, selling prices, rental prices, all this stuff. So Zillow uses all this data to kind of programmatically figure out what's the market value for your house. And then it just looks at it, figures out how much it can sell it for potentially, and then gives you an offer for a bit lower than that. So they can also make money in the middle on the margin. So Zillow's saying, hey, you want to sell your house? You're in a hurry? No problem. You can get an instant offer from us. We won't even come visit your home. Many people who need money quicker go for the option. So you just log on to Zillow or one of these other companies that's also doing iBuying, put in your information and get an offer within a day. And then that company, like Zillow, can either fix the place up if it needs to, and then hopes to sell it off to somebody else a few weeks or a month down the line. And it expects to make money on this margin, right? And Zillow is betting so much on this. Zillow expects that this whole strategy is going to boost its overall revenues over $20 billion in the next 5 years. That's insane. Now, this is a really new play. I just want to take a couple minutes to talk to you about pros and cons of this iBuying program, either as a homeowner and as the business itself. There are some concerns around it. Let's talk about it from a homeowner's perspective, right? You're in the market, you want to sell your house. The bet is that if you want money quicker and you are in a time crunch, you will be willing to accept a lower than market value for your house because you want the money right away. Con is, well, you don't get as much as you would get via traditional routes. Now let's talk about the business from the business's perspective, from Zillow's perspective, and the perspective of other companies that are doing this. There's a trick here. So through this iBuying program, Zillow is basically becoming a flipper. It just flips houses, buys it for a lower price, sells it at a higher price. So there are some concerns that the industry has with this whole iBuying program. It isn't as rosy as companies like Zillow might want you to think. You don't get any economies of scale. What that means is, let's say you have bought and sold 1,000 houses. That doesn't make the cost of the next house go down. Each house sale and purchase on a case-by-case basis. So you don't have economies of scale. Your cost of doing business does not go down as much, no matter how many houses you bought or sold. And you're relying heavily on your algorithm, and your algorithm is relying on a whole lot of data about property values and neighborhood values and all that stuff. And you can only get accurate data by having done a lot of these transactions. So it's a catch-22. You also don't see a lot of appreciation, right? One of the ways people make money in real estate is they buy a property and they sit on it and they see appreciation in X number of years. You don't get to see that because you don't have the money to just have it locked up in a house. You're buying it and you expect to sell it off within the next few weeks or a few months. You're really dependent on buying below market value. So you're waiting, you're expecting, you're hoping. There are a whole lot of people who want to sell their homes below market value so that you could then sell it to somebody else at market price or above market price. Now here are two other bigger ones. The real estate market is quite volatile. Something like a recession can hit and your sales can dry up. That means what? Now you're stuck with all this inventory of houses all over the nation that you can't sell off as quickly as you need to sell off. And why do you need to sell off quickly? Because of debt. Zillow has a lot of money, but it's obviously not using all of its own money to buy all these houses. It has financed this debt. It's taken money from huge lenders, huge banks to be in a position to buy these houses. And that's your biggest cost of doing iBuying is debt financing. What that means is all this debt that Zillow has taken from big lenders to be able to buy all these houses, that debt comes at an interest. So regardless of whether you've been able to sell off the houses that you bought from this money or not, you still have to pay the interest on it. And that's why Zillow really needs to have a quick turnover between buying the houses and selling the houses so you can make that profit and keep paying off those interest payments. Because if you can't sell these houses fast enough, now you have all this debt that you need to pay interest on, and that money is tied up in houses. So there you have it, folks. I'm pretty sure you learned something today. And if you did, I'd really appreciate if you could just hit subscribe. Tell me what you liked or did not like about this. Also, definitely go down into the comments and tell me any other companies you'd like us to cover. More than happy to do that. I'm here. Ask me any follow-up questions you might have. And what do you think about this whole iBuying program? Do you think it's a fantastic opportunity or not so much? On that note, this is Deepak signing off. See you next time.